Hello traders, Gary Wagner here. It is 10:47 in Honolulu, 4:47 in New York on Thursday, 11th day of August 2022, and this is the Daily Report for Gold and Silver. Market participants, investors, and traders are continuing to wonder about the Federal Reserve's next move in regards to an interest rate hike at the September FOMC meeting. Currently, the probability of a 0.5% or 50 basis point rate hike is at around 60%, with about a 40% probability that the Fed will enact their third consecutive 75 basis point rate hike. That has pressured gold lower. Gold has been flirting with $1,800 throughout the week. Today, gold futures basis the most active December contract traded to a low of $1,798.60 after opening at $1,807.90. Currently, we have gold futures fixed at $1,805.10. That is a net decline of about $8.60 or 0.5%. Unlike other days, the dollar has had little input in today's change, with the dollar being very much unchanged on the day. It is currently trading off by 0.09% at 104.99. Silver's taken a pretty hard hit today, down 2.3%. That's a total of 48 cents, with September silver futures fixed at $20.26. Today's opening letter, as well as our chart section of our video report, are focusing on yesterday's high when gold hit just shy of 1825 with a high of 1824.40, I believe, and how that effectively has come very close to a former support line that has turned into a resistance line. And I'm referring to the line that you're seeing on the screen right now that is based upon simply a series of higher lows. The first low coming in at around $1,400, and that occurred back at the beginning of 2020. The second low occurs at the low of the flash crash at around 1680. And this recent low that occurred about a month and a half ago. Up until that point, we had gold solidly trading above this series of higher lows up until 7 weeks ago, when gold effectively traded and broke below that price point 2 months ago. From there, it traded to the low of the flash crash. That was approximately $1,680. And then over the last 4 consecutive weeks, as seen by this weekly candlestick chart, we have seen gold trade higher with consistently higher lows, higher highs, as well as higher closes. Now, this week, yesterday, we had gold trade to that high of 1824. And I believe that that is a key and important level that could be an area of resistance, because we have seen gold flirt with 1800 rather than try to breach this particular price point at 1824.25. Of course, a break above that would make this trend line become a support trend line once again, but currently it best illustrates current resistance in gold. When we look at gold through the eyes of a daily candlestick chart, we can see that we do believe that there is possible or minor support at 1800, although that has been challenged throughout the week. Above 1824.25, as we talked about on a weekly chart, resistance really comes in at the 61.8% Fibonacci retracement. That occurs at 1831, with the brass ring, so to speak, or major resistance occurring at 1880. It's based upon this top, and we've used this top as a series of lower highs on the way down. It's important there. It also corresponds to a 50% retracement from a long data set that goes from the low of 1678 to the high of the year at 2077. In terms of major support, we still believe the 50-day moving average is the first level that we want to look at, and that is $1,788. And below that is 1766. That is the 78% Fibonacci retracement based on the technical studies that we have been looking at, which is trend analysis, Fibonacci retracement sets, as well as tops and bottoms, higher lows and higher highs, or lower lows and lower highs in the market. We believe that $1,800 has not proven itself to have solid support, and believe that it is most likely that we will see gold have a further decline and break below $1,800 per ounce. If this does occur, we will look at the 50-day moving average as a key and critical point to see if gold holds that level and bounces back off of that or breaks below that. It is for that reason that we will maintain our neutral stance with no active trades in gold or silver. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.